Happy Monday, everybody. I know I am here. I got to get my camera working, though. I don't see my camera working. So hang with me here 1 second, guys. How's everybody doing? Appreciate you all being here. Mike Shore or Mike Clark, if you can help me with my camera, that would be fantastic. Everybody can hear me okay? Even though you can't see me right now? All right, there we go. Should be up and running here in a moment. All right, thank you. All right, I see the tech guys here on my computer trying to. There we go. But we can't get that one going. Now it looks like we go. Oh, there we go. Hey, everybody. Can you see me now? Wonderful. I'm the worst. When there's a problem, I'm the worst with IT. So good thing. Excellent. Hey, John. Good thing that my team was here. Thank you very much, Mike Clark. Appreciate it. All right. Hope everybody had a great weekend. I was a little concerned on Friday. I think I mentioned it here. And then in the rooms, I was a little concerned that maybe the market was getting, just a little ahead of itself here. So we took some of the longs off, we pared things down, and then boom, lo and behold, we come in today and look where we are. S&P's up to another record, another 43 points. Dow's up to another record. The NASDAQ approaching all-time highs. Who knows? Who knows? And we're going to talk about this today as soon as I go through what some other things that I'm seeing in the markets. We're going to go through this today on can this bull market continue? I know that's all over the headlines, which is why I wanted to bring it up today, because this past Saturday was the 2-year anniversary of the start of the bull market. And what is a bull or bear market? We should talk about what does a bull or bear market really mean? Okay, does everybody know what a bull or bear market really is? Besides just saying, oh, if we're in a bull market, the market's going up, everything's going well, and if we're in a bear market, the market's not doing so well. What does it actually mean? Boy, I didn't even ask. Maybe we're not going to do a contest today, guys, with everybody putting me up there. I love that. I love that. I love that. Of course, we're going to do a contest. So, yes, if you want to spin the wheel later on, get your name up there, put me in there. So, what is a bull? What is a bear market? Okay. John, you say it's above the 200-day moving average. Okay, any other answers here about what it may be? Anybody? Bull means higher highs. Okay, Bobby. What else we got? What else we got here? Anything? Come on. These are good answers. Keep going. Okay. The tendency for capital to flow in or out of the market as a whole. Okay. That's good. What else? Come on. Keep it coming, guys. There's no wrong answers here. Keep it coming. And while you're doing that, I want to point out that the order flow in NVIDIA today is standing out big time. Normally on any given day, we see about a 1.5 to 1 call put ratio. So for every one put, there's about 1.5 calls. Today in NVIDIA, there is more massive call buying. Well over 2 to 1 call to put ratio today. And these out of the money calls that are trading, let me see exactly which ones I just saw. The next week, these are short terms. So the November 25th, let's get option chain in here. Next week, the 145 calls. Yep, here they are. Here they are on the radar. Look at this. Here's volume and open interest right here, guys. There's the 145s. We're seeing big interest on the 150s. So there's just massive out of the money call buying here in NVIDIA as the stock gets to new highs or close to new highs. Excuse me. Okay, Kevin, you said higher lows. Zora, you've got better outlook in the election year. Oh, you couldn't see my screen. You are right. Let me go right back. Man, I got so much going on today. Sorry, guys. Here it is right here. Appreciate. Sorry about that. Let me put this back up here. So you can see here is October 25th. These are the 145s here. These are the 150s here. So massive out of the money call buying today. Okay. Can you guys see that now? Thank you for Guillermo letting me know that. Okay, good. All right. So I wanted to point that one out today because these are short term also. This is really short term. Prior to the election, I'm not sure if that really has anything to do with it, but NVIDIA earnings are not for a whole nother month. So this has nothing to do with earnings here. Okay, so let's talk about bull and bear markets, okay? A bull market, okay, occurs when prices rise, whether you're measuring a certain stock, the S&P, the Dow, the NASDAQ, whatever it is, when stock prices have gone up 20% or more from their previous lows. Okay, so in the S&Ps, Saturday, 2 days ago, October 12th, marked the low in the market. And it's going off the screen, so let me actually bring up a longer term than because this goes, what you see up here, this goes just to 2 years. And we need 2 years and 2 days, literally. So let's bring this up here. Okay, here we go. This is way better now. Okay, so we have this all the way back at the beginning of COVID, but that is not the beginning of the bull market. What is right here. So this point right here, October of 22. So from here to here, where we are right now, that is the current bull market. Again, the definition is 20% or more from the previous lows. Now, the same thing holds for if it's a bear market. That would be 20% or more from the previous highs. Okay? Now, is this something to be scared about? Is this, the fact that the market has rallied so much just because it's 2 years, does that really mean anything? Well, some in the marketplace are kind of skeptical and are kind of scared about that. Okay? And since we hit those lows, let me give you these stats here, which is really unbelievable. The NASDAQ is up 89%. 89% in 2 years. Okay, the S&Ps with today's move are now up 63%. And the Dow is up 47%. That's in 2 years. That is in 2 years. Pretty incredible. Pretty incredible. Okay, now why? What are some of the things, guys, that some of the reasons why you think the market has continued to move higher and higher and higher? And not that it's going to move higher forever, never does, right? Over time, the market does go higher, but it's never in a straight line. It's never in a straight line. So why has the market done so well over the last 2 years? I mean, the market 2 years ago, the S&Ps, okay, let me put up, we've got S&Ps here. 2 years ago, the market at the low, the S&Ps at the low, 3577. 3577. And we're at 5857 now. Okay, so let me give you some more stats, and then we'll talk about, Gene, why, the market has, really just continued to go up over the last 2 years. Okay, so since 1950, anybody know how long the average bull market has lasted? Again, that's 20% or more gain from a bottom. Okay, we're 2 years into it right now. So since 1950, how long has the average bull market lasted? Yes, I know you guys could type that into your Google right now, how long, but hopefully you throw out some data here. Okay, good. 18 months. We got an answer. What else? Bear, thank you for that. Again, guys, don't be shy. Don't hesitate. There's no wrong answers here, guys. Just trying to get everybody engaged. John, did you look that up? Come on, are you a fast Googler? John Berg, 3 years. John Pro V. Okay, Bobby, 12 months. Gene, 2 years. Okay. The answer is actually 5.5 years. That is the average bull market run since 1950. Okay, the longest one is the one that happened at the turn of the century from the dot-com bubble. That one lasted 12 years. That one lasted 12 years. You know when the shortest one was? And you guys all lived through it, so there's a little bit of a hint. The shortest one was after the COVID rebound up until 2022, when we saw that market come crashing down when the Fed started to raise rates. That one lasted less than 2 years. So from the rebound of COVID to that point in 2022, that lasted less than 2 years. So if we think about, okay, we're 2 years into it right now, the average bull run lasts 5.5 years. Yes, we know, and for those of you that read my week ahead, because I talked about this, yes, we know past performance doesn't necessarily, predict future performance, but that's pretty positive, right? Tells us on average we've got 3.5 more years. That's pretty incredible. That is pretty incredible. So going back to why we've had this bull run. Okay, I saw someone said inflation. Okay, I don't know if you meant higher inflation, lower inflation. Yeah, exactly, Derek. Always, everybody's got to say that in the disclaimer, right? Past performance not necessarily indicative of future results. Why are some of the things here? What have we seen over the last couple years that has kept this market just grinding higher and grinding higher and grinding higher? Okay, there's really 3 things that come to the forefront for me. Okay, And whoever said it before, you mentioned inflation, but what about inflation? What about inflation? Okay, Guillermo says new technologies like AI. Okay, I love the answer. Rising GDP, geopolitical. Here come the answers. Technology. Okay, number one, first and foremost, lower inflation, right? From the depths of when the Fed first started raising rates to combat inflation. When we saw inflation levels at, whatever it was, 8-9%, whatever it was, now we've got rates, inflation normalized to 2.5%. So that's number one. That's number one. Okay? Now, what is front and center for the Fed now? Now that they have inflation, let's call it, quote unquote, under control, and yeah, maybe it fluctuates a little bit. What has the Fed been really focused on over the last 6 months, and what they talk about on a daily basis, continuing moving forward? Jobs. The jobs market has exactly, Guillermo, very good. Employment, Thomas, labor, excellent. Excellent, yeah. The labor market has just been incredibly resilient. Yes, I know it's tougher now. I mean, I know a couple of my kids are looking for jobs, finding it very, very difficult. It's way different right now than it was 6 or 9 months ago. Okay, but still overall, the labor market has been incredibly resilient. And then you know what else has helped push the markets higher? And that's why this upcoming next few weeks, next maybe 4 weeks are so important. Corporate earnings growth. Corporate earnings growth. Because you know what? When companies are growing, that pushes stock prices higher. Bottom line. Bottom line. Okay, so again, inflation down to target of 2.5%, whatever that new number is, but certainly massively improved from where we are a couple of years ago at the very start of this bull market. Okay, and whether the Fed cuts 25 or 50 in November and then again, it's really not going to make a difference unless we start seeing a lot of that eco data start changing. Okay, and then there is one more I want to put on here. Let me go back through the chat here because someone mentioned GDP. Robert, you did. Rising GDP. You know what? GDP, even with inflation coming down and all of the things that people are worried about there, GDP is still sitting at 3+%. So those are really the top things you can talk to of why the market has continued to do well. Okay, again, does that mean it's going to continue? Who knows? But things are certainly in place right now for the market to move higher. Yes, we have the election. Yes, we have geopolitical risks. Okay, but this slate of earnings, and it started off great with the banks. I know that's just one sector. Started off great with the banks, but this slate of earnings here, if corporate earnings can continue at these levels, even with elevated expectations, wow, that's pretty important. That's pretty important. And think about the things that have hit the market over the last 2 years, the negatives, the bad things. Okay, what are some of those things? And there's 3 things that come to mind for me about, I'll put this up here, market negatives over the last 3 years. What are some of the things that you have seen here that hit the market that, you know what? There was just a short-term blip. It was just a short-term blip. Okay, geopolitical events, that's still going on. So maybe I'll put 4 here. Okay, geopolitics. Okay, what else? Japan, boom, there we go, Gene. Yes, so that's the most recent one, right? The Japanese yen and the whole carry trade. Okay. Okay, what else? Well, think about, doesn't come to mind as easily because the Japanese yen carry trade thing was just 2 months ago. Okay, so think about two more things that we have seen really freak the market out, especially when you look at the headlines on all of the major networks, right? Who remembers it was a year ago, March of 2023, bank failures. Remember that? That seems like such a thing of the past, and it is, but that was only a year and a half ago. That was during this bull run. Okay? And then we also saw the bond market really, really melt down. Now remember, bond markets sell off, that means yields go higher. So think of these things. These are major, major events that happened negatively to affect the market, and yet here we still are at all-time highs. The bull run is still going. Okay? Now, if you want to talk about the political side of things, and this isn't about politics, okay, we had Biden drop out. Ordinarily, that would, president drops out of the race. Think that would affect the markets. But as we've talked about, does it really matter who's in office? No. It really doesn't. Whoever is the president, it doesn't matter. What matters is if it is a clean sweep or not of the White House, Senate, and the House of Republicans. Okay? Now, where are we with the state of the market? Who else remembers what all the headlines were about this? Right? When everybody was worried. Who knows or remembers what the Mag 7 is? Right? The Mag 7 was your NVIDIA, Alphabet, Meta, Microsoft, Apple, Amazon, and Tesla. Those were the 7. Okay? And how about all of the headlines and us sitting through daily saying that, oh man, so go these stocks, so go the overall market, meaning that the market breadth was concentrated just on these 7 stocks. And if, God forbid, these stocks, something happened, bye-bye market. Well, instead, the expansion of the marketplace to different sectors is so incredibly healthy. So incredibly healthy. So when we've had these drawdowns in the Mag 7, like we've seen, Apple went through it, NVIDIA went through it, Tesla went through it, Google's going through it, right? Yeah, it's kind of FANG, Robert. It's like the FANG, but expanded out to 7 stocks. Okay? That has broadened out so that if one sector is not doing well, other sectors have kind of picked it up. Going back to earnings, though, guys, this is why this season is so critical. Okay? Typically for the S&P 500 stocks, okay, and the reason I always refer to S&P 500, that's the broadest kind of concentration that we can talk about the overall market. Okay? Average PE is about 19-1. Okay? Right now, we're sitting at about 22-1. Significantly higher than the averages. So if price to earnings, meaning those prices are high relative to what the earnings are, If that's going up, 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 theoretically that should make it harder. That should make it harder for these companies to hit those earnings goals, to hit those revenues, to hit the guidance. Okay? Does that make sense, everybody? So those are all really healthy things, and that's why this upcoming earnings season is going to be so critical. Now, before we wrap up and get into the wheel, and hopefully everybody is signed up here, can everybody see this on the screen now? Can everybody see this on the screen? And again, I can share this with anybody that wants to see it or not. What this is are the 20 stocks. The 20 stocks that have increased the most during this bull run. And if you look here, yeah, there's a lot of tech, but there's also a lot that has really broadened out. That's not tech. And if you look at the top two, or excuse me, if you look at industry performance or individual performance, NVIDIA is the leader. Okay, NVIDIA in this bull run is up over 1,000%. 1,000%. Just think that. That is crazy. Number 2 on the list, which was SMCI, Supermicro, that's up 767%. Okay? But then, if you start looking down the list here, even though you've got some big whoppers up here, those are the only 2 that are in the top 10 from the tech sector. So it has really, really broadened out. It is really, really broadened out. Now, one more thing, because we focused all on bull markets, which we're in right now. Here are all of the bear markets. The bear markets that we have seen in the last 100 years. And there we go. There we go. Okay, so we've seen the biggest one, or the longest one, I should say, the longest bear market that we were in. Here it is right here, what I had talked to. This was the dot-com bubble, right there. That was the dot-com bubble. A loss of almost 50% in the S&Ps. The biggest drop was the Great Depression. That's right here. And that lasted about 2.5 years. 83% drop top to bottom. Okay, most recently, the last bear market we were in, which was that one we talked about, which was also pretty short. Actually, the last 2. Let's roll this up here a little bit. Okay, the one in early 2020 at the start of COVID lasted only 33 days. We saw a 34% drawdown in the market in 33 days. If you guys remember all that panic. And then the next bear market, the last bear market that we were in, was at the beginning of 2022. It lasted about 9 months, 25% drawdown. Okay, Gene, I'm happy to. So those of you that want the lists for the bull and the bear markets here, okay, email the same Prosper swag. Danny, I see that there. Thank you. I got it here. Email me at that same Prosper swag email address, and I will share those with you. All right, guys, we know what time it is. Yes, it is that time. Looks like we have less people on the wheel today. What gives? I don't want less people. I want more people on the wheel. Is that right, Mike Clark? We have less people there today? All right, guys. Here we go. And today's winner is John Gebhardt. Congrats, John. Congrats. People, shoot me an email. Shoot me an email at that email address you have on there, prosperswag@prospertrading.com, as well as anybody that wanted to see those charts. Please do that. And that's what I've got for you today, guys. Now, tomorrow, we are going to have a special guest in here. We are going to have Charlie Moon stepping in tomorrow. Okay, there we go. And thank you for putting that up, Michael Clark. Anybody that's interested in our rooms here or anything else about Prosper, please click that link right there. But you're going to see Charlie Moon tomorrow. And I just want to show you guys, here's the reason why I'm not down on the floor of the CBOE right now. Because I am doing this live from here. Sorry to make anybody, I don't know, a little bit jealous, whatever it is, but that's why I'm not down on the floor of the CBOE right now. I'm enjoying these colors and the amazing geography out here. But yes, tomorrow, so Charlie's going to be in here tomorrow because he's doing an AI webinar tomorrow night. So you can also click on that if you want to get signed up, registered for his Webby. All right. Bobby, how'd you know that's the third green? Thank you, Herbert. How did you know that, Bobby? That's the third green on the par 3 course here. But it's kind of hard not to like this, especially when you're a city kid coming from Chicago, and the biggest hill you have is taking an on or off ramp to the expressway. So, this never ceases to amaze me. All right, everybody. I really appreciate you guys tuning in. We'll see you again tomorrow. Again, Charlie Moon will be here tomorrow. Charlie's got an AI webinar tomorrow night. And appreciate you guys. Have a great one, everybody. See you later.